Hi, folks. Dan Bird here with the Daily Scan. And Bloody Thursday today. As you can see, the market did not like anything that it saw after the close last night. I talked last night about potentially that there might be market makers stepping in and starting to buy, or large traders starting to buy. That did not happen. So I said last night to watch it to see if that would happen, but it didn't. And not only did it not happen, it actually continued all the way down. In fact, the Dow at one point hit down 1,700 points. At one point, we're going to take a look and see what the damage was here in a minute. So, very bloody day on the market. May continue into tomorrow the way things look. As always, I am not a financial advisor, so everything I say here is for educational purposes. I am not making any recommendations to buy or sell anything. Nobody knows which way the market is going to go, including me. So let's take a look at what happened today. I'm going to try to go through this pretty quickly today. So market bias basically is not doing anything. However, if we look at it, what is happening now, you see some red bear squares, but look at the right-hand side. That these are every day, these are starting to fill in more. This is the long-term column. So we're getting more bears over there. We got one more today. Takes a long time to get a bearish signal in the long-term column. So we're starting to get them now over here. Many times, that's when the market has pretty much capitulated, and then we start switching back to getting bulls in the short-term side. However, we got a little bit of that, but natural gas got a bullish signal, but that was the only, also clean energy got a bullish signal, but those are the only ones today. And you can always look at the charts for each of these. There's clean energy trying to recover, trying to make a comeback. It's putting in a higher low, does have a shooting star, so that's not a good sign, but the 5 did cross the 21, so that's the criteria for a short-term signal. So that's what that looks like. Not really too good. Before I jump into anything else, I want to remind everybody of this image here that I created a while ago. And I first started talking about this way back here in probably in December, January timeframe, when I was comparing it to the market cycles. This is Dow Theory down here. So Dow Theory, this is the way markets typically work, regardless of what you're looking at, stocks, indexes, anything. They have an accumulation phase at the bottom. We had that back in, the bottom was in October of 23. Then we had a markup phase, some reaccumulation phases, and then we get to the top up here, we had a distribution phase, or what I thought was a distribution phase, and it turned out that that's what it is. And then when it dropped through the support, which was at 58.50 right here, then that confirmed the distribution and then started the markdown phase. So I think we're probably right at the bottom of this circle for the markdown phase now. Actually, we might be all the way down. Could be all the way down here in the markdown phase. Oops. Didn't want to do that. Let me go back. There we go. Okay, so we may be down here, and which means, and you can see right here, these are Fibonacci levels in through here, and two different Fibonacci. So I've got one that started way back here, the 23 bottom, all the way up to the high, and the other one that started here in the April bottom, all the way to the high. And where the Fibonacci lines are very close to each other, which I've highlighted here, those typically are support or resistance areas. So right now we're sitting right on this one right down here, right on the top of it, 5,400. That's a very important level. 53.66 is the longer term Fibonacci, so 38% level. The blue one here is from the April low, and that is the 62% level, 61.8% level. So those two levels right there line up to right where we are right now. Now, does this mean that we are going to bounce? No, it doesn't. We could drop right through that and head all the way down to this one way down here. 49.50, 5,000, somewhere in that area, which could be actually where we're headed towards. But I don't think we're going to go straight there. I think we're going to get another bounce, much like this, maybe another redistribution phase, and then maybe another downtrend. I wouldn't be surprised to see this happen in May, actually. So we'll see if we get this bouncing around in April, and then in May, we start another leg lower. I've been saying this for a while. I've shown this for those that have been watching the YouTube channel. You can go back and look at the previous ones. I've showed this many times before, all the way from way up here before we even broke support. In fact, all the way back here when we're still going up, making new highs. I was still saying this was probably a distribution phase, so be careful. And that's exactly what's happened. So keep that in mind as we go through some of the charts today. So let me jump back over here, and I want to look at the bottom finder chart and see what that's telling us. So we'll do it for the NDX because there's 100 stocks there. So you can see now the channel that we have now created. We've got a lower low and a lower high, and now another lower low. And right there is on support, but it could go down to the bottom of the channel, which is at 18,000, and then bounce back to the top of the channel. So, but at any rate, that is a potential channel. There's nothing to say that the price has to respect these lines. I drew the lines. The market has no clue where I drew those lines. But lots of other technical analysts certainly are drawing lines the same way that I am. So they know where they are. And they also know that this is a major support level right here. So we'll see if that'll hold. But more importantly, look at the percentage of stocks above their 20, 50, and 200-day moving averages. It is still higher than it was for this low. So we made a new low, but we don't have more stocks below their 20, 50, or 200. Interesting. What does that mean? Well, to me, it means we're probably not done making new lows. So we may still go down. Now, that could be a positive divergence, could be a bullish divergence as well. I covered divergences on Technical Tuesday this week. But you don't know that until this reverses and starts to go back up, until it makes its final lower low and starts to move back higher again. So you don't know. This could go to lower, and this could absolutely go down below the green line in all these cases. The VIX now is getting extremely elevated. So it's staying above the 17 for quite a while, since all the way back here in middle of February when this whole thing started. The VIX has stayed above 17. That's the hallmark of a bear market. So we might be in store for something similar to 22. It's not on this chart, but might be similar to 22, but we have to watch all of these. And right now, this is telling me there might still be more to go. Put call ratio again. Now this is a 5-day moving average, so it will take a couple of days for it to reverse and start to move higher. But it's far from where bottoms are made. It's still pretty far away from that 75 level where the bottoms are made. So we are not out of the woods yet by any stretch. If we look at I put in a rate of change as well for all of these, and you can see this is the channel since 2009. We are now below the halfway point. So last time that happened was in 2022, and we went down to the bottom of the channel, which is down here at about 17,000. The 1-year rate of change is not below 0. The 6 is, and the 3 is. In fact, the 3 is now at a new low, all the way back to the 23 low. These vertical lines are where the lows were. So this one is lower than 23. This one here is as well, the 6-month. The 1 year is still hanging in there, but these move faster than the 1 year. So rate of change is still moving down. This is another thing that we can watch for divergences to see if and usually they happen on the faster time frames. So the 3-month and the 6-month will have, there's the positive divergence there before we actually got the low. But we're not seeing any of that right now. They're just continuing to go lower. So all of this implies to me that the market has more to go. So I showed you Dow Theory with the market process. So now let me show you Dow Theory with the charts that I created on the homepage. And you don't need to be a subscriber for this. By the way, breakpointtrading.net is the website that I'm using here. that I created. YouTube channel link is here. The weekly newsletter is right there. I put that out every weekend. And I created this new Dow theory. This is the old Dow theory that basically used, it didn't put in transportation. Oh, sorry, that one didn't work. So I'm going to look at the other ones, the new Dow theory. So now we're going to look at equal weighted NASDAQ versus equal weighted S&P. So in this case, now you can see the equal weighted NASDAQ, it was moving up right here and moving down right here. The vertical lines are the same date. So when this happens, that is a bearish divergence. It's a warning sign that the market is getting ready to roll over and probably go down for an extended period. And that's exactly what's happening. So as of today, you can see we had those 3 days that the market was moving higher, and that was the end of it. So you can see now that both of these, the equal weighted, both of them ended at the low, which implies there's probably more downside left. They have not yet created a bullish divergence. And I had somebody ask about this on the bottom finder. Was there a bullish divergence on the bottom finder? Well, you might have thought that this here was one, and it could be. So these 2 points right here, as the market hit new lows. However, we're sitting right at the same place. So if this goes lower, then it is not a bullish divergence. So this needs to start moving up, which it did here. So it looks like it might have been right there, but it failed. And now we have to see if it might create another one. I suspect that we're probably going to get more stocks below the 20-day. Right now, it's 26% of them, 29% on the 50-day, and 40% on the 200. When these get down to around 10 or lower, and maybe I might even do this next Tuesday for Technical Tuesday, I'll show how to identify the stocks that are still strong, even as the market is selling off. All right, so now let's take a look at so the bottom finder. I showed that. So those are basically what I wanted to show. Oh, let's look at NASDAQ 100 and semiconductors. You can see same thing. Semiconductors actually went down more than the NASDAQ 100 did. So this is the one that should be leading, and it's leading to the downside instead. And you can see on the momentum there, semiconductors is leading on momentum as well. And then the last one is communication services and internet. And you can see here where it gave the signal back here in middle of February that the market was getting ready to roll over, which it has. And now you can see in this case, communication services had a big selling day, but there's a bigger gap over here on internet. So this is not leading us out either, although well, this is yesterday's volume, so it hasn't put it in yet for today. But huge volume for today too, just across the board, huge volume. So all of this is implying that we are going to continue going down. The last thing I want to do is basically what I did last night, and that's look at the Magnificent Seven, and we'll step through each one of these and look at the charts, and maybe I put some potential support areas in for each of these. So you can see here, this is Google. So support on this one is at about 145. Today is 150, so probably more to go tomorrow. We'll see what happens. Here's Amazon. Support here on Amazon is around 165, and it's at 178 today. So all of these are implying that we may continue to head lower. Now, tomorrow morning, we have the jobs number, so I'll look at that in a second. Support here is 190, about 195. It's at 203, so it's got about 8 more points to go on that. Meta already broke through this support. So the next support now in Meta, major support, is down at 455. And Meta's at 531, so that actually has quite a ways still to go. Microsoft broke through the first level of support. The next one is down here at 360. We're at 373 right now. Here's NVIDIA. NVIDIA's getting close to support. It's at about 97, I'd say 95 roughly. It's at 101 right now, so it's got a little further to go. Tesla actually held in there. Interestingly, Tesla actually held in today. It basically stayed right up there right in that same range that it's been in the last 3 days, and which is interesting because you would have thought that might have been the opposite. And actually, I want to pause here for a second and make a comment about something I said last night and offer my apology and redaction, because I did the video like tonight. I did it just after the market closed, and I didn't have much time to really take a look at it. So I saw a headline, and I'll actually show you what the headline says. Headline says, Tesla sales plunge, biggest decline in history. So that was one of the comments I made, that it was the biggest decline in history. And some people took issue with that. And actually, it is the biggest decline in history from a percentage perspective. That is correct. The thing that I got wrong, though, is the numbers, because I just scanned through this and I thought they were negative, but they weren't. So they actually did miss the numbers. I said that they beat the numbers, but they did not. So I just want to clarify that and try to set the record straight on that. So back to Tesla. Tesla hung in there pretty nicely today. Its support is way down here at 208, and it's at 26. So it's got 60 points to go to get to support, but it's sitting still right on the 21-day 21-day moving average. You can see right there, it's right at the reversion to the mean. So I think Tesla is really interesting right here. Looks like it wants to perhaps stick around in that area. Netflix didn't do too bad either. Netflix now has a diagonal support line as well. That's right here at about 880. So Netflix is at 917 today. Lots of red bars, but it also is just moving sideways. Let's look at Broadcom. Broadcom actually broke through its channel line, so it's probably headed down here to support at 143. It's at 154, so another 10 points to go on that one. Costco held up really nicely today. Costco actually had a gain, actually ended higher, up slightly. So Costco probably is one of the strongest ones in the whole set right now. Costco looked great. Palantir held in really well too. Palantir also has a diagonal support line that is right at roughly 80, 81. And it held in there too today. So Palantir actually looks pretty strong. Arista Networks is just breaking down. It's already through this support level. So the next support level for Arista is $60. It's at 71 today. And Eli Lilly broke down lower as well. I didn't put any support lines in, but it's already broken through its one support, and the next one is probably down here at about 725. So it's at roughly 790 right now. So Eli Lilly is continuing to head lower, and it has that typical pattern, that Dow Theory pattern market that I showed you on the slide a minute ago. You know, down, lower low, lower high, lower low. It'll make another lower high, etc. So we'll see if Lilly will continue that direction. All right, let me show you, because tomorrow is the jobs number, and this could have an impact on what happens. So as I always like to do, I like to look at the unemployment claims first. And what you can see is that the unemployment, this red box is what the report will be based on. Today's report has not been added to this yet, so I'm not sure what today came in at. But for the most part, it's pretty much, I think, lower than last month. And last month, we had a slight increase in the unemployment rate, went to 4.1. I think we might get a flat or even slightly lower. So I think we'll get 4.1 and possibly 4.0. So I will be surprised if we go up, if we go to 4.2. The Fed is expecting 4.4 for the year. So even 4.2 is not catastrophic. But I think if we stick right in this area, right in that 4.1 area, then I think the Fed will be okay with that. It probably means they won't raise in May. They're going to have a real quandary in May, however. The other thing you can look at over here, right below the initial employment claims, is the initial claims and the continuing claims side by side. So here's what I'm talking about. The initial claims is, you can see it rolling over right here. This is the moving average. So it's actually heading lower, while the continuing claims is just kind of flattened out. So I expect that this probably will go higher as more layoffs get announced, but they haven't hit yet. They're not in here yet. And the big thing to watch is if the initial claims stay low or continue sideways, but the continuing claims also go sideways or up, that means these people are not finding jobs. They're staying out of the market. So it's important to watch both of those things. All right. I think that's pretty much everything I had for tonight. I can do a scan. Of course, it will be a bearish scan. So I've got a, 5 crossing the 21. Let's see what comes up. Comcast. I'm going to go through this pretty quickly. Comcast actually looks like it's holding in fairly well, but it's sitting right on its 50-day moving average. So for those that are looking for short potentials, these could be good shorts. You can see right here the momentum is rolling over as well. Dollar Tree is one. Lucid, we talked about 2 nights ago. Looked like it was starting to move higher, but Lucid has collapsed. Rivian has collapsed. What else? Here's oil. Oil, look at that. Oil down big time today. Huge drop in oil. That should actually help the economy as we go into the summertime. Here's Visa. Visa had a big drop today as well. Hasn't got to support yet, but big downtrend on Visa. And then the energy sector had a huge drop, huge drop in energy today as well. So these might be areas to either start looking for opportunities or even start shorting if you want to. There's Exxon Mobil, which is the largest holding in the energy sector, as you would expect. That dropped quite a bit today as well. All right, so that's the daily scan. That's it for today. Thanks for watching. I hope everyone is safe. Be careful. Let's go look at the. Sorry, it's one thing I didn't do that I promised I would do. But let's go look at the indexes real quick. So here's the S&P. S&P, as you would expect, big drop, sitting right on support level right now. And it potentially could still have a bullish divergence. If this even goes down a little more or starts to curve and starts to go back up, and this does not get as low as this previous one, then that is a bullish divergence. NASDAQ 100, same thing, looks very similar. Has not confirmed a bullish divergence yet, but it's something that we'll keep an eye on, continue to watch. This, by the way, all of this seems to look like the market might be washing out here. We'll see what happens tomorrow. If we get a huge downtrend again tomorrow, then that I think is capitulation. Bitcoin. Bitcoin actually didn't do much. It's got a spinning top candle, just kind of sitting right there. It went lower, but not a lot lower. So not really doing too much on Bitcoin. And then the Russell 2000, also big sell-off today, just like the rest. I want to show you one last thing on the charts page, just to get a sense for the magnitude of the sell-off. This little button right here, this is the chart that I use on that slide that I showed you for the Dow Theory market distribution phase and markdown phase. In this case, I also put in the percent from the high, where we are right now. So we're down about 12% from the high. 10% is a correction. 20% is a bear market. So we are not quite there yet. We're not at a bear market. As bad as this might feel, it's really just a little bit more than a garden variety correction. There usually is a 10% correction each year. We haven't had one for a year and a half, since early in 2023. Let's see, 80% would be 4,900. So we'd have to get down here basically where this level right here, this Fibonacci level, that's 49.45. Right at this support level, this previous low right here, where I started this Fibonacci from, that's where it would have to get to officially be a bear market. So we're not there yet. We could get there. I think we probably will have another bounce higher and then another one lower. So we could get down to this Fibonacci at 51.25 or somewhere around 5100 in that area. And then I think the final one would be here at 49.50, right at that particular area. But I wanted to show you the percentage. As bad as it might feel, we're down 12%. 12% is not, a crash. It's not the world is ending. It's not a new depression is about to start. Nothing like that. 12% is a normal correction that we typically will see usually once a year, at least once every 2 years. We haven't had one for over a year and a half. So we certainly were due. Now, the next question, of course, is how much further will it go? And I'll keep updating this. If it continues to go lower, I will continue to update this. But right now we're at 12%. All right, that's what I wanted to cover tonight. Thanks for watching. Please like and subscribe. Let me know if there's anything you want me to check into, any questions you have. By the way, for subscribers, I am going to do a Zoom call probably Saturday the 12th at 1 p.m. Eastern time. I am still finalizing that. It's really a matter of when I actually have time to do it. So I think next Saturday, and I'll post that on my webpage. I'll actually put something right on the homepage for anybody that's interested. It'll be just a little block right here talking about it, and I'll post the Zoom link for subscribers will be on the webinars and newsletters page. So I'll post the actual link right on here. You need to be a subscriber to get to that. But you can see these are all the previous ones, and I actually record them and put them. The recordings are right out here. Here's the one I did in March. 3 hours we went in March. It's actually a little more than 3 hours. But all these recordings are here, as well as a lot of training is out here too. And by the way, for training, if you're interested, you can go to, right on the YouTube channel, you can go to the playlist that I have for Technical Tuesdays for anyone that wants to learn more about technical analysis and charting. Every Tuesday, I cover a new topic. So all of those are out there. You can always go back and review them. There's one on Bitcoin, explains everything about Bitcoin if you really want to understand what Bitcoin is. It has a picture of Santa Claus because I did it at Christmas. It's the only one I think that has Santa Claus on it, so it should be easy to find. So anyway, that's it. Be safe. We'll see what happens tomorrow, Friday. The jobs number in the morning might have an impact. We shall see. And I'll do it again tomorrow night. Thanks, everyone.